G'day, Shane here from Team Penny at HKY Real Estate. Here we are with Craig from Home Loan Republic. G'day, mates.
G'day, Shane.
Good to see you again. Okay, Guarantor Home Loans, or as we cheekily put it sometimes, the bank of mum and dad. I think this is an absolutely brilliant product that may be a little bit frightening for mum and dad, but probably not as frightening as it maybe is, mate. Can you just enlighten us on, firstly, what is a Guarantor Home Loan?
So a Guarantor loan is a loan where basically mum and dad might have a bit of equity saved up in their property and they want to assist their child into the market who, for whatever reason, may not have the required amount of deposit. Okay, right. So mum and dad will put up their property as an additional security for their child's loan.
Okay, so let's say I'm buying a house as a first home buyer. It's 500 grand. What sort of money are we looking at mum and dad are going to sort of...
So the good thing about the guarantee, it's called a limited guarantee.
Yes.
So mum and dad aren't guaranteeing the full $500,000 purchase.
Yes.
Their guarantee is typically limited to 20%
right.
of what the purchaser is paying. So again, if they're buying a property for $500,000, mum and dad's guarantee is for $100,000.
Which sits on their mortgage?
So the loan itself is still in the borrower's name.
Yes.
But that level of debt is assigned against their property,
right.
if you like. Okay?
Yes.
So it's an additional security for that loan. But ultimately, the borrower is still responsible for the repayments.
Yes.
Mum and dad is stepping in there to boost up the
okay, what are some of the benefits of going down the home loan guarantor?
So the guarantor path is typically situation is where the clients haven't saved the deposit, so it negates the need for any genuine savings whatsoever.
Okay.
No LMI.
Right.
So that can
again
save you $13,000 to $18,000 in cost. And again, because it's a low risk to the banks, they will price it, for their sub 80% product pricing.
So better interest rates.
So better interest rates, lower repayments. There is quite a bit of benefit there to do it.
Okay. Now, I suppose the one, glaring obvious thing is what happens if everything goes south and the kids, I don't know, default and the property needs to be sold.
Yep.
Are they going after mum and dad's house at that point, mate?
You'd hope not. So, but obviously mum and dad do need to know their obligations.
Yes.
With regards to that. So we often encourage, and we do sit down with the guarantors to let the independent of the borrower to let them know what their obligations are under the guarantee.
Yep.
What would happen in a situation like maybe a hardship situation or something like that? The best thing the borrower could do is approach their broker or bank firstly, and the best course of action, is to try and sell the house at good solid market value, and typically that'd be enough to clear the debt in its entirety.
So if there was a shortfall, let's say 20 grand shortfall, what's happening now?
The bank certainly doesn't want to be kicking out mum and dad out of the house.
Yes.
So they'll then work with all parties involved to work out a resolution to how we're going to recoup this $20,000. And I've never seen a guarantor lose their house over $10,000 or $20,000. But obviously, as a guarantor, you have to know worst case scenario is house could go.
Yep.
But in my time as a broker, I've never seen that happen because no one's going to obviously lose a property over a $10,000 or $20,000 shortfall.
Well, I said we've used this product quite a bit. I think it's an absolute. It is a very, very good product to help your children get into the marketplace. With the market growing, and they grow equity, then they can get the guarantor off the loan with a refinance down the track.
That's right. So obviously, depending on the market, we always encourage the client to, with the guarantor loan, to make advance repayments and try and pay down as much as they can as quickly as possible, so they start building their own equity.
Yep.
So obviously, that creates their own equity, so that property can stand in its own right. So we as soon as possible want to release mum and dad as a guarantee, so they're not on there for the next 15, 20 years. So. In a good market, typically, we'd have a guarantor off the property, hopefully within, 5 to 7 years.
Yep.
In a decent market.
You want to know more about home loan guarantees? Look, it costs nothing to get in touch with Craig, and he can run you through exactly the pros and cons. If you'd like to get in touch with Craig, details below. If you'd like some real estate advice, we'd love to hear from you. Give us a call on 0418 911 256.